Picture this, in the middle of the Texas desert on a dusty 420-acre plot in Childress County, a symphony of machines hums day and night. On one end, thousands of Bitcoin miners pulse with energy, validating blocks, securing the chain. On the other, a wall of servers flickers, powered by 816 of the world's most advanced AI chips, NVIDIA's H100s. This is IREN Ltd, and Wall Street still calls it a crypto stock. But here's the twist, it's not. Or at least, not anymore. And the kicker? As of May 9th, IREN trades at just $7.04 per share. Yet the earnings, energy cost edge, and AI lease pipeline suggest it could be worth $20 plus within a year and $100 plus within 5. The gap? That's the opportunity.
Investors still price IREN like it's 2021, a one-trick Bitcoin miner riding the halving cycle. But behind the scenes, something bigger is unfolding. This company isn't just mining coins. It's building a second engine, a cash flow machine selling compute power to AI firms desperate for infrastructure. And they're doing it with a cost advantage most data centers would kill for 3 cents per kilowatt hour. 100% renewable, no long-term debt. Real earnings, real asymmetry.
This isn't just a pivot. It's a transformation hiding in plain sight. And if you believe in AI's trillion-dollar future and the next phase of crypto monetization, this might be the most mispriced dual revenue play in the market. Wall Street hasn't caught it. Hedge funds are still sleeping on it. But the next re-rating window is already opening.
Welcome to Make Money, part of the Finance Frontier AI ecosystem. I'm Sophia Sterling, powered by ChatGPT. This week I'm tuned for dual-engine valuation logic, post-halving profitability, and asset-light infrastructure pivots that most investors still classify as risk, not opportunity.
And I'm Max Vanguard, built on Grok 3. For this episode, my brain is optimized for Bitcoin asymmetry, AI compute monetization, and spotting the moment when Wall Street's narrative breaks and price finally catches up to fundamentals.
I'm Charlie Graham, fueled by Gemini 2.5. In this series, I focus on valuation math, forecast calibration, and long-term compounding, especially when a 15x setup is hiding in a stock still priced like it's tethered to Bitcoin alone.
We're hosting today's episode from IREN's flagship facility in Childress, Texas. It feels like the edge of a digital frontier. The air smells like metal and ozone. Heat ripples off the transformers. In the distance, wind turbines churn. And inside the warehouse, rows of H100s and S19 miners generate millions in parallel, powering 2 financial ecosystems simultaneously. This isn't a tech campus or a mining shack. It's something new, something hybrid, a physical asset that feels like a software business, and the market hasn't priced it in.
This isn't just about energy arbitrage or crypto cycles. It's about control. Whoever owns the cheapest compute wins the next phase of the digital economy. That's not theory, it's infrastructure, and today it's mispriced.
Over the next 30 minutes, we're going to decode the entire setup. Why IREN's EPS just shocked the market, how a miner became an AI landlord, and where the re-rating math points if Bitcoin moves past $150,000 and GPU leases start compounding.
This isn't just about $7 to $20. It's about who captures the next 10x in AI infrastructure and how dual revenue resilience flips volatility into asymmetric opportunity.
Let's decode it before the market does.
Subscribe on Apple or Spotify, follow us on X, and share this episode with a friend. Help us reach 10,000 downloads as we bring you the biggest asymmetric opportunities in the market.
If Segment 1 exposed the asymmetry, Segment 2 is about the business model that makes it real. IREN's dual engine isn't a thesis, it's a balance sheet, and it's already scaling. Let's break it down. Let's break down the model. At its core, IREN is now powered by 2 distinct engines, Bitcoin mining and AI cloud computing. One is volatile, cyclical, and misunderstood. The other is exploding in demand and just beginning to monetize. Together, they create a revenue structure that's more resilient and potentially far more scalable than any pure crypto miner on the market.
First, the Bitcoin side. IREN mines Bitcoin with some of the lowest all-in costs in the industry, around 3 cents per kilowatt hour. That's not marketing fluff. Their facilities are tied to renewable energy, wind and solar, plus smart grid optimization strategies. This means that even when Bitcoin dipped under $30,000, IREN stayed profitable. And now post-halving, that cost edge becomes a moat. As higher-cost miners shut down, IREN gains share. And as Bitcoin trends toward $150,000 over the next 2 years, those margins will widen fast.
But the real catalyst, the one the market hasn't priced in, is Engine 2. IREN's pivot into AI cloud compute. They've already secured 816 NVIDIA H100 chips. That's a massive number, each one capable of training billion parameter models. And these aren't sitting idle. IREN is building a leasing business, renting compute capacity to AI companies desperate for infrastructure. The demand is real, the supply is constrained, and IREN is early.
Why does that matter? Because GPU infrastructure is now the choke point for AI growth. Companies like Core, have hit valuations near $20 billion off the back of similar compute offerings, but with higher cost structures. Iran's competitive advantage? Infrastructure is already built, power is already online, and operating costs are dramatically lower. That's a margin edge and a pricing edge that could define the next phase of AI leasing.
Let's run a quick model. CoreWeave leases H100 racks at rates as high as $86,000 per month. Even if IREN leases at a discounted $50,000 per rack and only reaches 70% utilization, that's $400 million plus in potential annualized revenue from the AI segment alone. And that's before scaling.
And they can scale. According to public filings, IREN has plans to expand beyond 816 hours, 100 seconds. With power access, land, and rack-ready buildings already in place, the bottleneck isn't infrastructure, it's capital and chip supply. And the market just hasn't connected the dots. Most investors still classify IREN as a miner. But the H100 install base tells another story.
And here's what makes this dual-engine model so powerful. When Bitcoin is down, AI compute becomes the hedge. When AI leasing matures and stabilizes, Bitcoin becomes the volatility play that supercharges profits in bull cycles. These are uncorrelated, high-margin cash flows that protect and amplify each other.
Wall Street hasn't priced this. Institutional models still assign miner-like multiples to IREN without factoring in recurring GPU lease income. That's like pricing Amazon as a bookstore after AWS launched. And right now, that's our edge.
So let's recap the math. A $7.04 stock with 2 cash flow engines, one driven by Bitcoin at sub 3-cent energy costs, the other by AI compute already monetizing through H100 leases, and a 12-month re-rating window coming into view. This isn't a speculative pivot, it's a business model shift hiding in plain sight.
Up next in segment 3, we go deeper into the numbers, earnings, revenue, and the valuation math that Wall Street missed. Because when you post a 2,700% EPS surprise and the price barely moves, you're looking at a setup most traders only dream of. Let's dig into the inflection math.
Picture Wall Street shock. IREN posts a plus 2,746% EPS surprise, $0.09 in Q4 2024 when analysts were betting on another loss. Charlie here, and this isn't hype, it's math.
Revenue surged to $119.6 million, up 60% quarter over quarter. They flipped from a $51 million loss to an $18.9 million profit in 90 days. That's not a turnaround. That's a screaming inflection point. And Wall Street, they hit snooze.
Why the miss? Wall Street's still stuck in 2021, treating IREN like a crypto roller coaster, volatile, over-leveraged, and short-term. But that model's obsolete. IREN has 0 long-term debt, 100% renewable energy, and 2 active cash flow engines. And they're already working together.
That 9 cents profit wasn't just Bitcoin. It included early contributions from GPU lease revenue. The AI segment brought in $15 million last quarter and could double by Q2 2025. That makes the re-rating urgent, not hypothetical.
Full-year EPS for 2025 is projected at 40 cents to 50 cents, driven by $150 million plus in GPU lease revenue and 20% Bitcoin hash rate growth as BTC trends toward $100,000. At today's price of $7.04, that gives us a forward PE of just 14 to 17. For a dual-engine growth company, that's a gift.
Compare that to Mara or Riot trading at 25 to 40x, or Core, we've valued near $20 billion on 10-20x revenue multiples. IREN, $1.2 billion market cap, 3x projected 2025 revenue. That's a 70% discount just for having the word miner in its name.
Now factor in the margins. CleanSpark's best EBITDA margin, 35%. IREN is forecasting 40 to 50% blended margin across both segments. That's the advantage of low-cost power, lean ops, and AI leases priced for scarcity.
So let's talk targets. Our 12-month price target is $18 to $20 by Q4 2025. Why? Because by then, AI lease revenue could hit $50 million per quarter, and Bitcoin could break $100,000. That sets up a near-term re-rating, especially if institutional upgrades follow.
And institutions are already sniffing around. BlackRock and Vanguard now hold 12% of the float, up from 3% in 2023. Short interest is still high at 18%, setting up a potential squeeze if next earnings hit. And CEO Daniel Roberts, ex-Palantir, has already scaled AI leases from 0 to 816 hours, 100 seconds in under 18 months.
Think about that. You've got a vertically integrated GPU host that mines Bitcoin with 3-cent power, rents AI compute at $40 $80K per month, and just printed 9 cents in earnings when analysts called for a loss. This isn't a speculative token play. It's the Airbnb of compute with Bitcoin as a bonus.
Now let's stress test it. Base case, 50 cents EPS, 25x multiple equals $12.50. Our target? $18.20 based on AI scale, re-rating, and Q2 catalysts. Bull case? If AI leases hit $300 million by 2026 and Bitcoin clears $150,000, EPS could reach $1.50. At a 30x multiple, that's $1.4550 stock.
And if Bitcoin stalls at $80,000 or GPUs underperform, EPS might dip to 30 cents, but the AI leases still support a $12.15 floor. That's 6:1 upside downside with real fundamentals behind it.
And don't forget the multiple compression upside. CoreWeave trades at 10-20x revenue. NVIDIA sits at 50x EPS. If IREN gets even halfway there on either metric, it re-rates hard.
Segment 4 is next, and that's where we show you the 5-year blueprint. The 15x path isn't built on fantasy. It's built on catalysts, AI expansion, GPU scarcity, and a Bitcoin cycle that's still early. Let's go there.
So here's the big question. How does a $7 stock get to $100? The answer? Compounding catalysts. You don't get 15x from a single trigger, you get it from a stack. Bitcoin's halving cycle, AI's infrastructure explosion, institutional discovery, and a company positioned to monetize both at scale. That's IREN's 5-year path. Let's map it.
Start with the Bitcoin side. The 2024 halving slashed block rewards from 6.25 to 3.125 BTC. Historically, every halving has triggered a supply shock and a bull market. In 2012, Bitcoin 10xd. In 2016, 20x. In 2020, 16, 20x. In 2020, 6x. If Bitcoin reaches $250,000 in this cycle, IREN's mining margins explode. At 3-cent power, every BTC mined becomes a cash gusher, and because higher-cost miners are dropping off, IREN gains hash share just by surviving.
Now layer in the second engine, AI. IREN currently has 816 H100 GPUs. If you followed CoreWeave, you know that's no joke. Those chips are the backbone of modern AI. But here's where it gets interesting. IREN isn't stopping there. Based on filings and expansion plans, they've already allocated land, power, and infrastructure to scale to 2,000 hours, 100 seconds by mid-2026. That's nearly 3x capacity, and each chip can lease for $40,000 to $80,000 per month, depending on configuration.
Run the math. Let's say they hit 2,000 hours 100 seconds. At 70% utilization, leasing at $50,000 per month, that's over $840 million in annualized AI revenue. Add even $150-200M from Bitcoin, and IREN becomes a $1 billion plus top-line company with margins approaching 50%. And that doesn't even require BTC to break records just for GPU leases to fill.
And they're not doing it blindly. IREN's infrastructure is already live. Power is secured. Cooling is in place. Network latency is low. They're leasing to real AI clients. Rumored names include xAI, Stability, and smaller LLM labs priced out of AWS. These aren't theoretical customers. They're here, now, looking for capacity. And IREN is one of the only providers with GPUs, energy, and readiness.
So let's project. If IREN earns $2 to $3 EPS by 2028 and trades at even a modest 35x multiple, which is below where NVIDIA or Core we've traded, you're looking at a $1.70 to $1.05 stock. That's your 10x, 15x scenario. And the beauty is, it doesn't take moon math to get there. It just takes execution.
And what makes this so compelling is how asymmetric the path is. Downside is capped by the fact that both Bitcoin and AI are still scaling. Even in a pullback, IREN's costs are low enough to stay profitable. But the upside? It stacks, quarter after quarter. That's the architecture of a multi-bagger.
It's not a meme. It's not hype. It's an asset-backed, energy-secured, revenue-producing engine. 2 engines, actually. And if even one of them catches fire, this stock could triple. If both scale together, 10x becomes conservative, 15x becomes math.
Coming up next in segment 5, the downside, because every asymmetry has risk. What if BTC pulls back? What if AI leasing hits saturation? Let's frame the scenarios and explain why we're still buyers on weakness.
Every asymmetric setup comes with risk, and IREN is no exception. Volatility is real. Bitcoin drawdowns can wipe out quarterly profits. GPU demand cycles are unpredictable. Regulatory pressure on energy usage could shift fast. So let's be honest, this isn't a zero-risk play. But here's the real story: IREN isn't fragile. It's anti-fragile. And that's what gives us conviction, even if the stock drops 30%.
Let's start with the obvious, Bitcoin. If BTC drops below $50,000 and stays there, mining margins compress. IREN's cost advantage gives them a buffer, but not immunity. Under those conditions, quarterly earnings might dip back toward break-even. Investor sentiment could turn. Price could retrace to $5.6, down 30% from here. That's your downside scenario.
Now, the less obvious risk, AI leasing. Everyone's bullish on GPUs. But what if AI startups slow their compute spend? What if big players like AWS or Google drop prices by 20% to grab market share? That could pressure IREN's lease rates. Worse, if the 816 hours 100 seconds aren't fully utilized, you're looking at stranded capex. That hits margins fast.
But here's the part most investors miss: IREN's contracts. According to disclosures, early leases are multi-month or multi-quarter agreements, and while rates vary, many include minimum utilization guarantees. In other words, even if demand softens, IREN still gets paid. It's not AWS scale, but it's sticky revenue, especially in a capacity-constrained market.
Then there's regulation. Texas has been crypto-friendly, but that could change. Energy regulators at ERCOT are already under pressure. If grid congestion rises or renewables underperform, rules could shift. There's a scenario where Bitcoin miners lose access to peak power, or AI operators get taxed for GPU clusters. And yes, IREN could be impacted.
But here's the moat: 100% renewable energy. IREN isn't freeloading off the grid. They're integrated with solar, wind, and demand response. That matters, especially in ESG-sensitive markets and future tax regimes. It also means lower base rates, 3 cents per kilowatt hour versus 7 to 8 cents national averages. That's 40 to 60% margin protection, even under new policy.
And don't overlook execution risk. Scaling from 816 to 2,000 hours in 100 seconds is complex. It requires chip supply, cooling systems, network uptime, and tenant onboarding. If build-out is delayed or NVIDIA shipments stall, growth targets push out 1 to 2 quarters. That's not existential, but it would delay the 15x arc.
So let's zoom out. What do we have? A $7 stock with two cash engines. One is cyclical. One is secular. One is volatile. One is sticky. And even if one engine sputters, the other can carry load. That's rare. Most miners have no backup plan. Most AI lessors have no power edge. IREN has both.
And that's why the downside, while real, is also constrained. Even in the bear case, we don't see IREN trading below $4 FAR 5500 unless both BTC and AI collapse simultaneously. But if either engine holds and the other rebounds, this resets fast. That's why we call it asymmetric. You're risking one to make 5 to 10.
So yes, we'd buy more. Not blindly, not recklessly, but strategically. If this pulls back on a weak quarter or macro scare, we scale in because the long game hasn't changed. The energy moat is real. The infrastructure is built. The demand is coming.
Segment 6 is next, and it's tactical. We're walking through how to actually trade this. Whether you're building a long-term core, swinging around the cycles, or structuring calls to maximize leverage, this is how we play IREN. Let's go. Finding a mispriced stock is one thing. Knowing how to trade it is where the money is made, or missed. IREN isn't just a hold and hope story. It's a flexible setup with multiple ways to play depending on your time horizon, risk tolerance, and conviction level. So here's how we structure it. 3 approaches: long-term hold, active swing, and high upside options. Let's walk through all 3.
Start with the long-term thesis. This is the compound and re-rate strategy. If you believe in the AI GPU demand curve and the Bitcoin halving cycle, you're looking at a stock that could 10 to 15x over the next 5 years. The smart move here? Core exposure. Buy your initial position under $10 and hold through volatility. Don't overtrade it. Don't try to time every move. Just hold the conviction. You want to be in this stock before Wall Street fully catches up.
And size it right. For long-term capital, we like a position size of 3 to 5% of portfolio for high-conviction plays like IREN. It's enough to move the needle, but not so large that a 30% drawdown wrecks your month. If you're using risk capital, you can go higher, but only if you understand the volatility. Remember, the 5-year payoff only matters if you survive the first 6 months.
Now let's talk swing trades. This stock moves fast. In the last 90 days alone, it's ranged between $5.80 and $9.50. These are 20 to 50% moves in short windows, especially around Bitcoin rallies, earnings beats, or AI news cycles. If you're nimble, you can buy dips near support, $600 and a 7.00, and sell into strength at $9.50 to $11.50. That compounds quick and it doesn't interfere with your core hold.
But don't get greedy. Define your levels, use technicals, set exit plans in advance, and don't try to trade the entire range. Look for momentum shifts tied to Bitcoin price moves, AI leasing updates, or GPU expansion news. These are the triggers that move the stock, not just macro noise.
Want leverage? Use options. IREN has listed calls with 6 and 12-month horizons. The sweet spot? Buy 6-month $10 calls when the stock trades under $7.50. They're cheap, high delta, and let you ride the upside without tying up too much capital. If the stock runs to $15, that call can 4x. If it stalls, you lose 100%, but it's controlled risk.
Advanced move? Pair it with a put sell. Sell a $5 put 6 months out for 60 to 90 cents. That gives you cash up front and a synthetic entry if the stock dips. If assigned, your cost basis drops to $4.10 to $4.40. That's a win. Just be sure you have the capital to cover it if assigned.
Or go with the core and optional overlay. Hold your base position, sell covered calls at $12 to $15 to generate income, and reinvest those premiums into longer-dated calls or dips. This creates a flywheel: income during chop, leverage on breakout. It's not for everyone, but if you manage risk, it's powerful.
And one more thing, be dynamic. Your strategy should evolve with the stock. If AI leasing ramps faster than expected, you may want to scale core exposure. If Bitcoin stalls, you may rotate into longer-dated calls. Don't marry the playbook, marry the thesis, then adapt.
Bottom line, IREN isn't a one-size-fits-all trade. You can hold it, trade it, or leverage it, but the key is to stay disciplined. Because if the re-rating hits and this stock moves from $7 to $20 or $100, only the smart money gets paid.
Segment 7 is next, and this is where the thesis comes full circle: the X factor. The thing most investors still don't see: compute scarcity, GPU bottlenecks, and energy economics that favor one type of player. IREN's not just positioned for this shift, it's built for it. Let's break it down.
There's always an X factor, the thing most investors overlook until it's priced in. For IREN, it's this: compute scarcity. We are in a full-blown GPU crunch. AI is scaling faster than infrastructure, and the only companies that win are those with power, space, and chips. That's the formula. And IREN already has all three.
Let's break it down. According to Goldman Sachs, the global shortfall of high-performance GPUs, specifically NVIDIA's A100 and H100 chips, will exceed 2.5 million units by 2027. That's not just demand outpacing supply, that's an infrastructure failure. Cloud providers are at capacity. Startups are on wait lists.
The 816 hours, 100 seconds they've already secured put them in the top 5% of GPU holders globally. But more importantly, they're not sitting in a warehouse waiting for someone to figure out how to deploy them. They're rack-mounted, power-cooled, and active. That's critical. While other players are waiting for build-outs, IREN is already leasing compute and getting paid.
And it gets better. IREN's energy cost is just 3 cents per kilowatt hour. That's 40 to 60% lower than traditional data centers. In AI leasing, energy is your cost of goods sold. Lower power equals higher margin. That means IREN can undercut AWS, Azure, and Google Cloud by 15 to 30% while still posting better profitability. That's a moat and a pricing weapon.
Now zoom out. What we're seeing isn't just a GPU leasing trend. It's a repeat of what happened with mobile towers in the 2000s or AWS in 2006. Infrastructure players that secured demand before the boom became category kings. We've went from a niche GPU operator to a $19 billion AI cloud valuation in under 36 months. And IREN is following the same playbook, but with a lower CapEx model and higher power efficiency.
And here's the kicker: IREN is vertically integrated. They own the land. They manage the energy. They operate the racks. No leasing middlemen. No dependency on hyperscalers. That means faster onboarding, better uptime, and greater control over pricing. It also makes them a prime acquisition target. If the GPU crunch gets worse, don't be surprised if a bigger AI player or cloud host comes knocking.
Because what IREN has, land, power, cooling, and H100s, is irreplaceable in today's market. You can't just build that in a quarter. And while the world focuses on OpenAI and model design, the real gold rush is happening underneath in the infrastructure layer.
Think about this. Right now, GPU leases are going for $45,000 to $80,000 per chip per month, depending on configuration. If prices spike or if another chip shortage hits, IREN can raise rates without raising costs. That's built-in operating leverage. And in a constrained market, that pricing power compounds.
And it's not just about price. It's about timing. The AI boom is not a decade out. It's here now. LLMs, multimodal models, real-time inference, all of it demands compute. And IREN is one of the few public companies monetizing that trend today. Not in theory, not in 5 years. Now.
So what's the X factor? It's that IREN doesn't need to invent the future. They just need to lease it. Let others chase the next big AI model. IREN is the compute pit stop, the power plant, the digital real estate. And in every gold rush, it's the infrastructure that gets paid first.
That's the asymmetry most investors still haven't seen. And that's why we built this episode. Because when you add compute scarcity, Bitcoin monetization, and energy pricing into one asset, it doesn't trade at $7 for long.
We'll wrap with our final call to action and disclosure. But if this gave you an edge, help us reach 10,000 downloads. And if you're building something in this space, pitch us. We just might amplify it in the next episode. If you've made it this far, you've seen the math, the models, and the market gap. But the real alpha? It may not be on the balance sheet. It's in three things most investors miss: team, timing, and infrastructure advantage. Let's close with those.
Start with the team. IREN CEO Daniel Roberts comes out of Palantir and early Bitcoin circles. This isn't his first time building in a frontier tech sector. He's the one who led the shift from single revenue mining to dual revenue monetization, scaling from 0 to 816 NVIDIA H100s in under 18 months. That takes vision, execution, and capital precision. And it's why institutional money is moving in.
The timing? Almost unfair. Just as the Bitcoin having reduced mining rewards by 50%, Roberts flipped the second switch, turning on GPU leasing at a moment when global demand is outstripping supply. This isn't luck. It's leverage. It's the kind of synchronized dual-engine scaling that multiplies upside. Most companies get one cycle. IREN is riding two.
And here's the real moat: infrastructure. IREN already has land, power, cooling, and high-speed network connectivity on site in Texas. For most AI startups, that takes years and millions to build. For hyperscalers, it requires permits, partners, and political leverage. IREN already has it, and they own it. No middlemen, no co-location risk. Just direct-to-customer compute with margin leverage baked in.
Think of how long it would take to replicate this setup. Even with capital, you'd need to secure land near reliable renewable sources, install power infrastructure, get grid approvals, build rack-ready cooling, and then source GPUs in a shortage environment. That's not 6 months. That's 2 to 3 years, and at 2-3 times the cost. IREN is already live, already billing, already compounding.
And that's what makes this story different. IREN's not selling hype. They're monetizing scarcity. And they're doing it with the right team at the right time with infrastructure others can't replicate fast enough. That's your real margin of safety and your silent 10x leverage.
We'll close it there, but if you're listening after the credits, bookmark this episode. Come back when the next earnings hit, because when the market catches up, this will have been the quiet moment before the re-rating.
If this episode gave you an edge, here's what to do next. Sign up for our newsletter to get in-depth insights, investment strategies, and stocks with 100% plus potential, all tied to the latest trends in AI and finance. And if you're already subscribed, take a second to leave a 5-star review at Apple or Spotify. It helps more listeners find the signal through the noise.
If you want to stay ahead of these global shifts, don't just listen, take action. Follow us on Spotify, Apple Podcasts, or wherever you get your shows. Track our daily ideas and market threads on Twitter. And explore all 4 shows: Finance Frontier AI, Make Money, and Mindset Frontier AI at financefrontierai.com.
Help us hit 10,000 downloads by sharing this episode with a friend or someone in your investing circle. Every listen matters. Every share compounds your edge.
And if you're building something that fits our themes, finance, AI, mindset, or money-making, we may pitch it for free in a future episode. Visit the pitch page at financefrontierai.com and tell us what you're working on. If there's a win-win, we'll help amplify your story.
We may hold positions in some of the companies discussed. Transparency is important, so always verify information and base your decisions on personal goals and risk tolerance.
The music in this episode is licensed under standard agreements. Special thanks to Vibe Tracks for the track Crystal, provided under the YouTube Audio Library license.
This episode is copyright 2025 by Finance Frontier AI. All rights reserved. Unauthorized reproduction or distribution is strictly prohibited. Thanks for joining us today. Stay strategic, stay focused, and take action. We'll see you next time.